Hey system traders, Jeff here, and I have Build Alpha up here and running. What I want to do is just do a quick demonstration, show you some of the major features of Build Alpha. I'm just going to be scratching the surface, but I do want to highlight some of the features, more particularly some of the robustness testing that helped us to ensure that our strategy is not curve fit to the historical data. So when you first launch this, you can see we have all these different indicators up here. We have highs, lows, value charts. We have a bunch of market breadth indicators, economic data, value charts, stuff going over to market 2, which is data 2. There's all types of information here. These are thousands of signals or indicators which Build Alpha can use. There really is an amazing array of possibilities. Now, what we've done is I've gone and selected all of those. I told Build Alpha, go ahead and consider everything. And we're going to be building a long strategy for the crude oil market. And Build Alpha comes with a bunch of daily data for, you can see in here, for the futures, ETFs, as well as forex. We've selected, as you can see here, I highlighted crude oil. And then on market 2, I put the U.S. Treasury 10-year note. So what am I doing here? I am building an intra-market strategy. I'm telling Build Alpha we want to build a long-only strategy for the crude oil market, but go ahead and take into consideration the 10-year Treasury note futures contract. It's also going to analyze the Treasury market using these signals, as well as the symbol for our tradable. Next, we are going from 2007 through 2018. So that's going to consist of our in-sample and out-of-sample data. We have profit targets. I have that set to nothing. We have a stop loss. I just put a fixed amount there of $3,000. And then I just picked a fitness function, net profit versus drawdown. Of course, there's all types in here. Expectancy score, K ratio, t-test, net profit. I like to use net profit versus drawdown, so we're going to include that there. Then we have a max hold time. I'm telling Build Alpha to go ahead and have a max hold time of this trade from 1 to 3. So we have 1 here, delta 3, in steps of 1. So this is just telling Build Alpha to go ahead and test for 1 hold, 2 hold, and 3 hold. And also I'm telling it to test for profitable closes, 1, 2, and 3. So very simple exits. This is a short-term trading strategy on the daily market. Then we have our in-sample trades. We want to have a minimum of 50, out-of-sample, minimum 50, and we have our out-of-sample percentage as 50. Go take a look at some of these other settings I have here. We have nothing accounted for slippage and commission. Not too worried about that on the daily chart. Intraday, that would be more important. Our entry and exits are going to occur on next bar at open, not at the close. And we have our out-of-sample segment. It's going to be at the end. You could change this to the beginning, so the out-of-sample segment is at the beginning of your data. We're going to keep it more traditionally at the end. Maximum number of rules per strategy, we're going to go ahead and put that at 3. And I want to put that to 3 here as well. And really that's it. So again, what we're doing here is a quick demonstration on how quickly you can set up Build Alpha to start testing trading ideas. And it's really this simple. Now, it does come with, like I said, daily data, but you can also import any price data that you want. So if you want 12-minute bars on crude oil or 15-minute bars on the ES market, you can import those relatively easily, and you can have Build Alpha then build strategies on really any time frame that you desire. I'm just going with the basics here to keep this demonstration quick. All right, I'm going to press down here, continuous simulation. This is going to tell Build Alpha to go ahead and using its genetic algorithm to start analyzing possible combinations of indicators, signals, and start generating some strategies. And we can see here that it is generating about 8,000 different strategies per second, and it's keeping the very best ones based upon my fitness function, which is net profit versus drawdown. And you can see every few seconds that this table is getting refreshed with new strategies that are producing better results based upon that metric than we've done before. So we're going to pause this and let this run for a couple minutes. Okay, I went ahead and stopped the simulation. And here we have our strategies, and we can see that everything here is laid out very nicely. You can see what the different metrics are for your particular strategy. You can come in here and actually show the trades on a chart here. You can do other things such as show the last 15 trades. But I don't want to show you all of these features. There's a lot here. What I want to show you is how you can use Build Alpha to quickly generate systems and then also help to validate to avoid curve fitting. So we have a bunch of strategies here. These are the best ones, and we can see the name here actually contains the actual rules that were used to generate that strategy. Now the first thing I'm going to do is this was on the in sample. I'm going to go to, you can see the out of sample as well, but I'm going to go to all. So this is going to include the in sample and out of sample, and I'm going to reorganize these by net profit versus drawdown. Now I'm going to bring up this little viewer here, which is going to show me the equity curve for the in sample, which is white, and then the blue, there's our out of sample. And let's just pick this very best one here. Now there's two tests that I like to run on this. See, what most people would do is like, oh wow, that equity curve looks really good. The out of sample looks excellent. The in sample looks great. I'm going to start trading this, or this is a viable system. Well, Build Alpha allows us to put our strategy that we just generated through some rigorous testing to see if it's likely to work on the live market. I'm going to highlight two of these tests with you right now. Now, the first one I like to look at is the individual equity curve. So I'm going to bring this up, and this is the equity curve of our strategy, and the blue kind of highlighted area is the out of sample, and it looks good. But what we can do is go ahead and compare this to random. All right, so what does this do? This shows us, while Build Alpha was generating our strategy, it also kept a library of randomly generated strategies. And what this allows us to do is to compare our equity curve right here to a bunch of random strategies. And we could see that the random strategies here are all in red, creating this cloud of random strategies. It's pretty amazing that these random strategies, the best ones here, actually do produce profit. And the point we want to see here is our equity curve. Does it stand out from the equity curve of all these random strategies? So ideally, if we weren't overly fit to the historical data, our strategy should stand out from random. And does it? Well, it kind of does. This isn't a great example. It's above most of it, but I would say it's not a great example of standing out from random. You can see that the equity curve of our system often touches and is within this red region, right? And if you could imagine, if we just colored our strategy red, it would look indistinguishable. It wouldn't stand out from all these other equity curves. So that's not a great one. So what this is telling me is we can probably skip this, even though the in sample and out of sample, right, they look good. What this is telling us is it's maybe not so great. Let's continue on. Here's another one. Let's see what this looks like. This one's even worse. See how it's within the red cloud here? So it's really no different than a random strategy. We don't want that. We want our equity curve to stand out from random. Not so great. So this is where you just have to know how Build Alpha, what to look for, and then just start going through it. Now this one's better, right? It stands out from random a little bit more. In here it falls in a little bit, but at the end of the equity curve, it's actually better than all the other random. So that one's better. So this one looks okay, not great, but it is standing out better from random. Now I said I was going to show you two tests. So this equity versus random is really cool. And then there's something called noise test. Let's bring that up. So what Build Alpha is going to do is take the historical price data of the crude oil market and change it ever so slightly. It may change some of the opens, some of the closes, some of the highs, and some of the lows, altering the data just a little bit to create a new price series. It'll do this 100 times, and it'll generate these 100 squiggly lines here. And what this is saying is, how well is our system performing if we change the historical price ever so slightly? And what this tells us is a robust strategy should stand up to slight changes in the historical price. And if it does, we're going to produce equity curves that make money. Now, these do produce money. It's not the best looking one I've seen, but at least it does make some money. In other words, all of these curves that have ran our strategy on it were altered by Build Alpha, and they produce equity curves that make money. All right, move down to the next one, 70. Here's the equity curve. Okay, this is okay. Most of it is above random strategies, but then as of late, on the out of sample, it does start falling back in. So that's not the best. So let's apply the noise test. All right, so if we go and modify or have Build Alpha modify the historical price, we can see they all do remain profitable. There's a couple that end up actually making more money. Most of them degrade, but they're all profitable. So the main thing is are they profitable? And I like to see them tighter. They are all profitable, but I wish they were tighter. And ideally, our equity curve, the real one here, should be in the middle. That means that when we manipulate the historical price data, sometimes it produces better results by chance, and other times it's going to produce results that are slightly less than our original. So that's what I would like to see. This is okay. So maybe I'll write this one down. This one isn't a great one when you look at all of these. It's just kind of okay. But I'm going to record that. So that's number 70. Let's go through here some more. It's kind of like before. That one's okay. Noise test is clearly, you could see this noise test is bad, right? So our real equity curve, when you introduce noise to the historical price data, all the equity curves come crashing down. Some of them actually go negative, and none are above our blue line. It just brings them all down. So, you know, this is a great point, right? Look at the equity curve. This looks decent, particularly on the out of sample. It looks like a decent equity curve. And what Build Alpha is telling us with this noise test is it's probably overtuned, overfit to the historical data, and that's what this is showing here. Let's continue on. All right, this one looks interesting. Nice looking equity curve. It's even hugging the random more. All right. So a little bit better than random, but that's not much. Noise test actually looks okay. But a lot of these take a long time to get out of the zero line. But at least they're above average. But that one's just not great. See if we can find something better. No. Start with a noise test. Yeah, kind of all over, but it's okay. Yeah, a lot of these are in random. In random. you can see that what this turns into is a hunting game that we're going to have to build alpha does all the hard work. And now what we're trying to do is filter these based upon our metrics that we're looking for, our robustness testing. And again, this is just a quick demonstration. We're only going through 2 of these. There are more here, such as the metrics here, which is another way to look at random versus our population of top 100 trading systems, I should say. And we have drawdown, P&L. You can look at average profit per trade. And you can see how these histograms, the blue histograms are the top 100 strategies, and the red are the random strategies. And we want to see these skewed a certain way. And then we also have some other variance testing and Monte Carlo. But again, I just want to keep this simple. So I'm going to continue to march forward through here. Here's one that looks interesting. We have the equity curve, looks good. The random, look how clear this is. Look how much better this produces returns than random strategies. It really stands out from random. So this is a good sign. Next, we'll do the noise test. And look at this. They all end up as profitable. It's not ideal. We would like to see the blue, our strategy, in the middle. But we can see that it's at the top. But they all remain profitable. So this one looks decent. I'm going to save this one. All right, this one I found is okay. We're above random a bit, then we start meandering into it. It's not the best. The noise test, they're all producing profitable results. We have some that are very similar, right? You can see how these equity curves are very similar to our blue one here in solid blue. So that is okay. I'm going to write that one down. Look at this one. Here we have a clear example of the equity curve being above random. And if we take a look at the noise test, this looks pretty decent as well. Ideally, we want to see the blue in the middle. We don't see that, but at least everything's creating profitable results. It's well above the zero line. So this one's okay as well, so I'm going to record that one. Here's another example of clearly above random. And if we do the noise test, we can see they're all profitable. There's a good number, there's a couple of up here that are, at least 1 or 2 that are near where we are here. Now, I will say that this isn't, as a quick demonstration, none of these have stood out as excellent. They were all just good. But I spent, a good 20 minutes here going through the different possibilities here and selecting different strategies based upon those 2 metrics in regards to the noise test and the individual equity curve versus random. The point again here is how quickly you can eliminate the vast bulk of the strategies as just probably overfit garbage, and then build and then locate the ones that have high probability. Now what we want to do is, next step what we want to do is take the code. So you could highlight any of those strategies, go to the EasyLanguage code, and it's going to actually generate the EasyLanguage code right here. And what we can do is just simply copy this over to TradeStation and paste it in. I'm going to create a new one just called temp000. Cut and paste and verify. And so our strategy is all compiled and ready to go. You can see here the entry signal. You don't need to know EasyLanguage to know what we're doing here or to execute this, but if you do know EasyLanguage, you can see you can come in here and look at the code. Here is the comment at the top telling us which markets we're using, the symbol and our intermarket, as well as some other information. What's nice is it generates a lot of code here that we're not using, but you could use. So you could play around with profit targets, stop losses, highs, lows, the maximum hold time, number of profitable closes. So these things you could all play with if you are so inclined, if you know EasyLanguage and want to come here and tweak it. And you can see what our entry is. But we don't need to know any of that. We can load this on a chart and take a look. Out of all the testing I did probably in the last half hour, I've probably been working on this for about a half hour, I was able to identify 4 possible strategies. So what I did was I created 4 charts. And if we go to the symbol, we can see the symbol is from the current date, 11/8/2021. We're going back just 3 years. And that's going to give us our unseen data, right? So all of this, what we did, we loaded now the strategy code into a chart that has unseen historical data. Build Alpha never touched this data at all. So this is clearly unseen walk forward data. And this would be a final test. So let's do this one first. Here's the equity curve, and I think this is actually the best one out of the bunch. And this one looks good. We have 40 trades, or just under 40 trades. Here is our performance, $23,000 in profit, almost $600 per trade, with a 7,600 drawdown, creating an equity curve that looks like this. And we could see what some of the trades look like over here as we try to go long. Next, let's look at this one. This one's kind of a decent equity curve too. Look at this. Now we only have 23 trades with $14,800 in profit. In fact, this one here, the net profit versus drawdown is about 2. This one here is 3. Let's go to the next one over here. This one isn't as good. And we can see we only have 16 trades. And let's look at this last one. And this one's not as good either. So there you have it. I literally spent, about a half hour doing this. And we only demonstrated 2 of the tests. But you can see how I was able to walk forward these on unseen data, demonstrating that these work on the unseen data. So this is really good. This is what you want to see. You want to be able to move it to the walk forward unseen data and produce results like this. And again, keep in mind, we were just looking at 2 of the robustness checks. And this is really what I wanted to highlight to you, that how you use Build Alpha to eliminate strategies that don't look like they're going to be working for the live market. Even though the equity curve in the in and out of sample looks good, we can use these robustness tests to quickly eliminate ideas that are probably not going to work. Now, of course, even now that we have these on the out of sample unseen data, are these tradable? Oh, they very well could be. They very well could be. That is, of course, going to be up to you if you're going to pull the trigger on any of these. And also, it's no guarantee, of course, that they're going to continue to work, obviously. So the main thrust here is, I think you can see how Build Alpha can be used to help validate trading systems. And of course, it's not a silver bullet. It still requires work. You need to know what you're looking for and how to properly use Build Alpha. But you can see that it can create some interesting looking trading systems. And of course, this is a very quick demonstration. There's a lot more to Build Alpha, and you can get a lot more complex with your strategies and development process. But I hope you found this helpful. Feel free to reach out to me if you have any questions. I'd love to hear your comments and your questions, and I'll do my best to answer you right away. And I look forward to seeing you in the class on building strategies with Build Alpha.